Well, I'm super excited to be here at HomeGauge together. And so I'm Bette Hochberger, CPA, CGMA. I've been working in tax for more years than I would like to admit. And before I was in tax, I was on the other side of the desk, as they say. I was a director of finance, controller, that kind of thing. So I've run businesses, I've advised businesses, and I run my own business now. So I've really kind of seen it all and seen it from every side, and super excited to hopefully get this to move forward. There we go. So today, what we're going to talk about is how to set up your business to avoid trouble with the IRS, because nobody wants that. How to manage your money to be super profitable, because I think everyone does want that. And how to use accounting information to grow your business, which probably a lot of times people don't realize that that's even a thing you can do, but it is. So if we go all the way to the very beginning, right? When you're setting up your business for the first time, you have a couple of options. There's different kinds of entities. They have different structures. They have different tax implications. They have different treatment at the state with the IRS. But if you do nothing, you can still be in business. That's what we call a sole proprietor. It's probably my least favorite type of business to be, because you have no protection at all. If you screw something up while you're working, you're kind of very vulnerable, let's say, right? Someone wants to sue you, you have no protection. They can, take your assets, go after you. It's not a great way to run a business. It's very risky. So along comes this great invention, the limited liability company. And it really does what its name says. It limits your liability personally. So if you're not sure what to do and you want to start your own business, I would say at least do an LLC. They're pretty easy to set up. And for your taxes, it has actually no difference if you're an LLC. If it's just you, if you're the only owner and you're an LLC, there's no difference between being a sole proprietor and being an LLC. You file your taxes the same exact way. So that regard, it's pretty simple. It's almost like really cheap insurance, because if you do the things you're supposed to do properly when you're running the business, if someone does try to sue your company, they have to do what we call piercing the corporate veil to get to you and your personal assets. So it's really, kind of the minimum starting point, I would say, if you want to have your own business. Now, the next thing is probably my most popular small business structure is an S corporation, which means it's a small corporation, right? It's not like those big guys like General Electric or, some of those huge companies you hear about. It's small. And there are some restrictions on who can be an S corporation, but for the most part, it covers just about everyone. It does have a slightly different tax situation than an LLC, though, because you now need to file a corporate business return separate from your personal. So that does make it a little bit more complicated. And then we have those traditional C corporations. I do see these sometimes. If you think you're going to get an investor for some reason, you might end up as a C corporation, or if you have a foreign owner. But if you're not in any of those situations, it is likely not for you. So I would say if you're not sure what to do, go with an LLC. The cool thing is you can even change between some of these as far as the IRS is concerned. So you can set up an LLC, and then, if your CPA says, hey, we can save you a lot of tax dollars if you choose to be taxed as an S corporation, you can actually change how you're taxed with the IRS. So that's a cool little tidbit there, is that you don't have to be just the one thing because you chose it in the beginning. You can switch a little bit. There are limits on how often you can switch, but you can. And of course, consult with your CPA and your attorney. Everybody's situation is different. Not everything applies to everyone. These are broad generalizations, but you need to do what's right for you. So once you go through that, you figure out what kind of entity you want to be, these are the basics of how you're going to start your business. You want to pick a name, right? And you might want to think about some of those marketing things from the last panel when you're picking your name, right? And maybe you don't want to make it so strange that no one knows what you do. And sometimes in certain industries, you actually have to have what you do in the name. Like, for example, in the accounting world, if you're a CPA firm, you have to have that in your name. Then you're going to go ahead and register with the state. Hopefully nobody already picked the name you're choosing with the state, in which case you're going to have to try again and pick a different name. But once you figure that part out, you register with the state. And really, once you do that, you're in business. You exist, you're incorporated, or you're organized. The next thing you're going to do is you're going to get a federal employer identification number, or an EIN or an FEIN. And it sounds like it's a scary, overwhelming process. You can actually do it on the IRS website. It is really straightforward. You answer some questions, and at the end, they give you the EIN. So you get it done in a few minutes. So once you've got your registration and your EIN, now you can go set up bank accounts. You can go get credit cards. Or you can really do things in the business name because you have all of the pieces that you need. You're probably gonna have to go get insurance, right? Most states operating a business, you need some kind of insurance, especially when you're a licensed professional. I know for me personally, my firm, I had to get some ridiculous amounts of liability insurance to operate in the state of Florida. So I'm sure many of you in many states need to do the same thing. And then accounting. Don't forget about setting up the accounting. I might be biased to think that it's important because I'm an accountant, but it's something that is much easier to do from the beginning and do it correctly than to go back and try to fix it later. So, best tool out there for small business owners, QuickBooks, hands down. There are other things out there. You can try them. Some people like some of them better than others. QuickBooks is my favorite. It's my go-to. And then once you're even looking at QuickBooks, there's different versions of QuickBooks. There is a desktop one. There is an online one. I think what maybe we all learned in the pandemic was how important having things in the cloud is, right? Having access to that information. My firm at this point exclusively uses QuickBooks Online. We do not support desktop anymore. It just became technologically a little bit too cumbersome. QuickBooks has amazing tools. You can invite accountant users in, and it doesn't use any of your licenses. And then we can really go in and see what's happening in your books in real time. In fact, you can be in there the same time as your accountant is, you'd be working together. So that's a really cool thing that it does. And QuickBooks has a lot of tools and automations that have made doing accounting much easier. But at the same time, QuickBooks also kind of fools you into thinking you know how to do accounting. So get some training if you're going to DIY, right? Make sure you know what you're doing. And you're still going to want to refer to an expert, whether you find a QuickBooks Pro advisor or CPA, someone who has a lot of experience in QuickBooks, to make sure you're doing it right. Because like I said, they can fool you into thinking you know what you're doing and you're creating a big mess. Unfortunately, the software doesn't tell you that. So you're going to go ahead, set up QuickBooks. There are different versions, even when you get into online world. Most people can function on one of the lower two tiers. Don't necessarily need the more complex ones. Although by all means, if you want all those tools and extra reports and things, go ahead and use it. There's some fantastic add-ons at the top end. And don't be upset that you're paying a monthly fee for it, because the reality is, even if you do go with QuickBooks Desktop, it's not a software that you buy once. They've actually changed their desktop pricing to be a monthly charge as well, because everybody loves recurring revenue. So you're going to pick your version of QuickBooks, get an accountant or a bookkeeper or somebody in there working with you. And those bank accounts and credit cards that you went and got with your federal EIN Well, you can actually, with most banks, connect that right into QuickBooks. I'm not going to say all banks because they don't all work, but most of your big national, regional banks that are well established will have these bank connections. And the brilliant thing with this is that it pulls in the transactions into kind of a holding cell, if you will, in QuickBooks, where you can review all the transactions, and it keeps you from having to do the data entry of typing everything out. So it's going to save you really a lot of time, whether it's you yourself doing it, if you hire a bookkeeper, whoever it is, the automation is going to really cut down the time burden of having to deal with your accounting. Now, there's other tools in that banking module, like rules. You can set up rules. Like, say, for example, if you know that every time you go to Exxon, you're paying for gas, you can create that as a rule and it will automatically enter those transactions for you. So it can do a lot to take that kind of what used to be an administrative burden off your plate and free you up to do things that you would rather do, which is probably not accounting. Another cool feature in QuickBooks is their invoice. A brilliant marketer once told me that accounting people think that an invoice is just part of what you do in accounting, right? It sets up your sales, it sets up your receivables. And what he told me was the invoice is really part of your sales and marketing function. And it took me a little while to agree to that. But the reality is it's true, right? Don't have a blank invoice that just has some, like, your name typed on it, nothing else on there. Upload your logo. Maybe pay a graphic designer to help you lay it out so it looks pretty. Use your company brand colors. Make it part of the rest of your business, the rest of your marketing, so that it's consistent. And when people see it, they're just going to think of you, right? It's really, it was a brilliant insight that I never would have thought of as an accountant, but that's why accountants and marketers are different careers. Okay, so now this is probably, other than what kind of entity should I be? Should I hire people? How do I hire people? This is probably my next most popular question. So, hiring. Do you want people to be on payroll, or do you want them to be 1099s or contractors? Well, first off, if you decided to go that S corporation route, if you're the owner, you have to be on payroll. I have had people audited. I have represented people in audits to the IRS. And when I asked why did they get flagged for audit, the response was the owner wasn't running payroll. So it's a really easy thing to think like, oh, it's not important. It's super important. It's really important. You don't want to give the IRS a reason to come and snoop around, not when it's something you can take care of. Now, other people in your company, hiring, they have pros and cons. Contractors also have pros and cons. Sometimes you can choose between the two. Sometimes you can't. And the IRS actually does have a whole list of conditions that they will come in and tell you that the people working for you are employees, right? And you don't want to run into that situation either. So you kind of have to know what you're looking at, and if what you're looking to do with the people you hire is going to have them fall into that employee category. So hiring, pros and cons, right? This is the number one thing that establishes somebody's actually an employee is control. If you're setting their hours, if you say, hey, Joe, I want you to be here at 8 and I want you to, to work till 5 and you only get a half-hour lunch, that level of control of setting their schedule by the IRS rules makes them an employee. No matter what you want to do, no matter what agreement you set up between each other, that condition of having the control over the worker's schedule makes them an employee, whether you want them to be or not. Employees, their roles are usually not super specific. You can give them other things to do. So, for example, if you have somebody who's answering the phone at the office and you're like, hey, can you learn some QuickBooks and take over bookkeeping? Not that I'm recommending this, but I see it happen a lot. You can do that because they're your employee. You control what they do. You can set their hours, set their tasks. You can make them work and do what you need them to work and do. Reliable. Hopefully they're reliable, right? You're going to have a consistency. They're going to be there on a set schedule. They're going to be there every day if they're full-time, or if they're part-time, when they're coming in and what hours they're working, right? And that's really a great stability when you're running a business, to know that somebody's there when you need them, when you depend on them. And they understand the company culture. Company culture is really important. It's one of those things where if it's bad, it's really bad. And you don't want people to not understand how everybody in the company works. For example, I'm in Florida, not far from Miami. Cafecito time is a real thing. So if you have employees that are on the clock at 3:05, they understand it's cafecito time, right? So if you have people who are just coming in as contractors, they might not understand the culture or how, maybe it's casual Fridays, or maybe everyone wears jeans all the time. Whatever it is, that company culture, the employees are immersed in it and they understand it. So now the cons. Payroll taxes. Obviously, if you have employees, it's not cheap, right? You're paying them a salary. You're going to be paying payroll taxes. There's federal taxes. There's state taxes, right? And of all taxes to pay, the number one most important taxes to pay is your payroll taxes, because the IRS will be knocking on your door literally very, very fast if you are not paying in payroll taxes. That is not something they mess around with. Social Security dollars are not yours. They are, you're paying in, it's being withheld from employees' paychecks, and the government wants that money right away. When you hit a certain size, you might have to offer benefits, right? That can also be very expensive, but you can flip that around to a pro and say, well, when you can offer benefits, it's actually a selling point to hire good people. They might want health insurance. If you're able to offer it, it can be good. It's expensive, but it can help keep your people around. And then labor laws, right? There's a lot of labor laws. There's minimum wage, workman's comp. There's a lot of laws that surround hiring employees, and you're going to have to follow all of those labor laws if you've got employees. 1099 contractors, right? So pros, they cost less, right? We're not paying those payroll taxes. Maybe you only bring them in for certain jobs. If you have something that's, very technical or very specific, and you need somebody with that expertise, but you don't do that kind of work all the time, you can bring in that contractor when you need them. You don't have to have them full out on payroll. You don't have to pay them benefits. Sometimes I've heard of people offering benefits to their 1099 contractors, but it's kind of unusual. It's not required. And it's a casual relationship. Like I was saying before, if you just need somebody for a very specific job, you can hire them for that specific job. They're not there day in, day out. You don't have to keep them busy for 8 hours a day. Now the cons, they might cost less overall, but you're going to pay them more, usually on an hourly basis. If you take a look, the contractors, you might be paying them a lot more than you would per hour if you hired somebody. And that casual relationship, which is nice when you only need them when you need them, it can backfire if they're not available when you need them. I've had that in the past. Accountants in tax season, we need more help. And I've hired contractors in the past who have told me, yeah, I'll work for you. And then when everyone's busy, they don't have time. So it kind of blows up in your face a little bit. And that company culture, they might not understand. They might not, know that everybody goes to happy hour on Tuesdays or whatever it is. And you have no control. And that's probably the biggest con, right? You're not setting their schedule. You can't tell them that I want you here 8 to 5. You can't tell them like, I want you to do this specific job the way that I want it done.
they're a free agent. They're allowed to set their own time, use their own tools, and use their own methods. They don't have to do it the way you want it done because you don't have that control. So once you realize you do need to run payroll, like I said, if you were that S corporation owner, or if you're going out and hiring people, it's a little bit of a process to actually set up payroll to run it. So the first thing is you have to register with the state, right? And this is different than registering your business to be created in the first place. This is usually, most states call it an unemployment system. Florida, we call it a reemployment system. I don't know why. They changed the name a few years ago, and that's just what they call it. You're going to want to find a payroll processor. If you take nothing away from this talk other than this one key point, do not do payroll by yourself. Payroll is not a DIY type of thing. There are many parts of taxes, of accounting. You can muddle through it, figure it out. You don't want to screw around with payroll. It is very, very complicated. There are a lot of forms. There's a lot of deadlines, a lot of schedules. It's very confusing. It's very overwhelming. Find an expert who runs payroll. I personally love the service Gusto. That is my favorite. QuickBooks also, within QuickBooks, you can pay for their payroll service, and then it's all in one place, tied into your accounting system, and it's right there. It's like a one-stop shop. But whoever you go with, you have to make sure they're going to file the tax returns and pay those taxes for you. I have had many upset clients come into my office and say, I don't know why I got in trouble. I hired a payroll company. And I said, well, did you make sure that they were going to file and pay the taxes for you? And they didn't even know that was something they should ask. So always make sure. I would imagine most of the big payroll companies at this point do that automatically, but make sure, right? Because you're the one that gets in trouble. The payroll processor doesn't get in trouble. You, the business owner, gets in trouble. So find a reliable payroll processor, make sure they are filing and paying all your taxes. Then once you're really set up, you can set all kinds of different parameters with payroll. You can decide how often do you want to pay? Do you want to be every other week? Do you want to be twice a month? Do you want to be every week? Do you want to set a vacation policy? Do you want to, I don't even know what else. There's just a lot of things that you can decide on your own, specific for your company, once you got that payroll up and running. So it is complex to get there, but once you get it set up, you're pretty good to go. Now, even if you decided you're going to hire all your employees, you might still have 1099 filing requirements. I cannot tell you how many times I've heard somebody say, I don't need to file 1099s. I don't have any contractors. I don't have any subcontractors. Well, it's a little bit of a misnomer calling them contractors, because there are very specific rules for who needs to receive a 1099. So any individual, LLC, or partnership that you pay over $600 to in 1 year, which is not a lot of money, right? They need to be 1099. Also, I don't have it on this slide, but rent. If you're paying office rent to somebody and it's an individual, an LLC, or a partnership, and you're paying over $600 in 1 year, I can't imagine what kind of rent you would have that would be less than that. You actually have to 1099 those people as well. So good rule of thumb, ask anyone that you pay money to other than employees to give you a W-9 form. You can find it right on the IRS website, Google it, you can print it, you can find fillable ones. That has all of the information that you're going to need to figure out whether or not you need to 1099 someone that you are paying, whether someone is a person or an entity. You might notice that from that list, there's no corporation that needs a 1099. It's individual, LLCs, or partnerships. Corporations, you don't have to worry about it. There's no 1099 requirement there. So that might be a reason, maybe if you want to look at, for your own business, setting up a corporation, you're not going to receive all these 1099s that you then need to figure out what to do with, because corporations don't get 1099s. Back to QuickBooks for a second. There are actually features in QuickBooks that let you track this information, which is really helpful. So there is a area in the vendor information screen that lets you put in the EIN, which you're going to get from that W-9. You can put in the EIN, you can put in the legal name, you can put in the address, and there is a little button that you can click to track for 1099s. And then at the end of the year, if you've got all of that information, when you need to file the 1099s, which are due the following January, you can run a report that is going to show you everybody that needs a 1099, the amounts. It has all the information right there. It is a mad scramble in January to do this. It's the start of a new year. There's a lot going on for everyone. Right now, it's November, December. Do this now. Go start getting W-9s from anyone that you have paid this year. You will thank me later when you have all of this information, by the end of the year, and January 1st, you'll know who you need to file 1099s for. Your CPA will thank you when you have all this information, and it's easy to find, easy to do, and then easy to file 1099s. Okay, the tax part. This is the thing that scares people, I think, about starting their own business. So all of those entities that aren't C corporations, sole proprietor, an LLC, S corp, all of those entities, the taxes are paid on your personal tax return. Sole proprietor and LLC, it goes on your Schedule C. It has a little profit and loss on there, and it shows you how much you're getting taxed on at the end. It's the bottom line, your net income. S corporation works a little bit differently. As I mentioned before, you're on a separate tax filing altogether with that business. It generates a form called a K-1, and that K-1 information kind of summarizes everything that happened in the business that year, and you take it and you have to put it in your personal return. It's a Schedule E, page 2. It's very specific, but these are called flow-through entities because the entity itself isn't paying the income tax. It's you, the owner, who's paying the income tax. C corporations, they pay their own taxes. It's not paid for by the owners. That's a whole different ball of wax over there. I'm not even going to get into that too much. But to be in compliance with the IRS, you might have heard of these quarterly estimated taxes. You need to pay them on your personal Social Security number every quarter. If you don't pay in quarterly, you are technically not in compliance with the IRS. I know many, many people over the years who have said, why should I give that money to the IRS? I can use it to make more money. Well, if you ever run into a problem with the IRS, the first thing they're going to do, if you need to make a deal with them, is they're going to say, you need to be in compliance. You need to pay quarterly. You need to get caught up. So if you do it from the start, you're setting up great habits, right? The IRS uses what we call a pay-as-you-go system. So they want you each quarter to make those quarterly estimated payments. And they're not like exactly on the quarter. It's like April 15, June 15, September 15, and then the following January 15. So the dates are a little bit wonky, but it's the general idea. It's quarterly. So the absolute best way to deal with your taxes is to be prepared for them. People get upset when they owe a lot of taxes, and I like to reframe it and say, it's good when you owe a lot of taxes because you've had a successful business, right? The thing that's painful is when you didn't prepare to pay those taxes, if you didn't make those quarterly estimates, if you didn't set aside money for it, that's where taxes become super painful. The best thing you absolutely can do, and if you can do it from the beginning, you'll be a very happy business owner. Take 15% of all of your income, all of your sales, every dollar that comes in, go set up a separate bank account in that bank, and take that money and put it in there, right? 15%. So every dollar that you make, take 15 cents and stick it in that bank account, and kind of forget about that bank account until those estimated taxes are due. Then you're going to take that money and you're going to pay it in, and you'll be covered. And then when April comes, you're not going to be upset. You're not going to be worried about doing your taxes. You're not going to procrastinate because you're scared of what the bill is going to be. You're paid in. You're not going to have a problem. In fact, you might be overpaid in and you can roll it forward. That's the best feeling when you know you're on top of things, right? So that's a great way to handle the tax situation and keep yourself in compliance. And then further, to keep yourself in compliance, you have to keep copies of receipts, right? People are scared of the A word, of audits, right? And the reason you should be scared of an audit is, well, it does take up a lot of time. It is a hassle, but if you don't have the documents to back up all your deductions, everything you've taken, in the year that they're looking at, well, now you're going to start sweating it, because where are you going to find all that information? And many people think, well, I can just pull up my bank records, like my bank statements, I can pull up my credit card statements. That's actually not going to fly with the IRS. You need to actually keep copies of receipts. But, right, we're in the age of the cloud. You don't need to literally keep paper receipts. You don't need to have a shoebox and keep all the little slips. And if you've ever tried to do that, you'll notice that it fades over time and you can't read them anyway. So it's not so helpful. There are many, many apps out there that you can digitally keep these receipts. In fact, QuickBooks on your phone, take pictures of receipts. There's Receipt Bank, although I think they changed their name. Zoho Expense. There's so many things out there that help you manage that. And most of the time, you can also take those images and attach it to the transaction in QuickBooks, right? So if the IRS is like, well, show me all your gas receipts, we want to know that you really spent this much money on gas this year, you can pull it all up and hand it to them, and then they'll say, okay, this is legit. It goes away. I've had audits like that go just like that. We hand over all the documents they want, and they said, okay, you guys are good. It's all fine, right? And the corollary happened. You don't have any receipts. Nobody's able to come up with things. And the agent's like, well, we're not going to allow you to deduct these things because you didn't keep receipts. So best way to protect yourself from an audit is to keep all this backup, keep receipts. Now, I'm guessing pretty much everybody on this is going to be using their car or using some kind of an automobile or truck for business purposes. The IRS wants you to keep contemporaneous mileage logs. What does that mean? It means you get in the car and you say, okay, my starting odometer is 100, and when I get to the site that I need to get to, it's now 120. And I just traveled 20 miles, and I'm going for this client or this job. That's a contemporaneous mileage log. But again, you don't have to keep it on paper. You don't actually have to literally write these things down. QuickBooks, the phone app, will track this for you. There are other apps out there also, and they'll generate reports at the end of the year, and you'll know exactly your auto mileage. You can keep all of this. And first off, you need it for calculating a lot of things, but also in case you get audited, you're going to have that documentation that the IRS is looking for. Another area that gets a little hairy with the IRS, meals. It used to be meals and entertainment. And a couple of years ago, there were a lot of changes to the tax rules. Entertainment is not deductible at all anymore, unfortunately, but meals still are. However, they're only 50% deductible. So don't think that you're doing yourself a big tax favor by taking clients out to dinner all the time. You only get half of it, but meals are an area of scrutiny. And if it's over certain dollar amounts, you actually need to have notes as to who was there, what did you talk about, where did you go, how much did you spend. Some of that information is already on the receipt, but not who you went with, who was there, what you talked about. That's not going to be on there. But if you're going, especially if you're going to some expensive places and really spending a lot, that's something the IRS will look at. So the bottom line is you want to cover your butt when it comes to taxes and make sure that you can justify all of the expenses that you're claiming on your taxes. Sometimes people ask me, well, how much can I put for office supplies? It doesn't really work that way. You can't just say, well, I'm in this inspection business, so I get, $100,000 a year of office supplies. It does not work that way. It is literally what you spend is what you can deduct, assuming you can back it up in the event you're audited. So this is super important for keeping yourself safe, right? Audits happen sometimes. Most of the time it's just because you're unlucky, is the reality, but good defense is to have documentation. So once we get past all that boring, horrible tax stuff, why'd you get into business? Probably, you wanted to be your own boss, probably wanted to make more money. I know me personally, I wanted to have flexibility in my life. I have kids. I wanted to be able to do stuff with them and go to their games and all that kind of stuff. But a lot of times what happens is when you have your own business, you create a really horrible job for yourself. You're working a ton of hours. You're trying to do everything all by yourself. And if your company's not making enough money or it's not supporting you, you might start to resent that, right? So we really want to make sure you have a highly profitable business that's supporting you, supporting your life, paying your taxes, doing all these things. So the best way that we ensure profitability is to take your profit first. I'm actually a profit first professional certified in the profit first system, and I'm not going to get into great detail on that system, but I'm going to give you a high level overview. And if anybody is interested, actually, I can send you the first few chapters of the book, Profit First. You're going to have to get in touch with my office and we can email that over to you. But number one, remember I said before, you can set up a bank account somewhere else and you can put your tax money in there. Well, you can go and set up another bank account in that bank and put your profit in there, right? So you pick a percentage. You don't want to pick a percentage that's so high that it's not sustainable. So maybe you only start at 1% if you're a new business, right? Or if you're a business that's been struggling, start at 1%. Every dollar that comes in, take 1% of it, put it in that separate bank account. That's your profit account, right? And now you're going to pay yourself first. That's also not a new concept. If anyone's a fan of any of the money gurus like Dave Ramsey, pay yourself first. So you're going to make sure that you, the business owner, take care of your payroll before you start worrying about all your employees and your overhead and all your other costs. And we talked before about setting aside money for taxes. Now, what's left over? That's what you're going to operate your business on. And a lot of times it's going to feel like it's not enough. This is where you go and you start cutting unnecessary costs, right? Those monthly subscriptions that you don't use, probably the biggest drain on business profits. Way too expensive internet or too expensive cell phone plans. Overhead, offices that are too big. And at this point, after the pandemic, there's plenty of people who don't even have offices anymore. All of these things are cutting into your profits. It's taking money out of your own pocket. So you want to operate as lean as possible, right? You want to cut out the fat. You really want to have a streamlined system that makes sure that you're able to pay your taxes, able to be profitable, able to pay yourself first. So I briefly already mentioned you set up another bank account. So this is part of the profit first methodology. The reason you set up a different bank account is when you go and you log in and you see like, oh, here's my profit account, here's my tax account, here's my operating account. Oh, I need more money in my operating account. Well, I'll just move it. I'll just put it back later, right? I like to say later never comes. If you put it in a different bank account, it's a little bit out of sight, out of mind. So you're not so tempted to go and tap that profit, tap that tax dollars. You kind of keep it locked away. Now, how do you come up with the amounts that you're going to put in each of those accounts? Well, Profit First actually has a system and they develop these target allocation percentages. We call them TAPs for shorthand, and they're different for everyone, but there's an overall guideline that the Profit First people came up with. They did a lot of research into it, and it's based on revenue levels. And then this is the fun part, right? You've set aside that profit. Well, you didn't just set it there to leave it there forever. Every quarter, you take a profit distribution from that profit account, and you have to go and celebrate your success, because you want to connect in your brain the profits and pleasure, right? This is a little like mental manipulations. You want to make sure that you are using those profits to celebrate whatever that may be, go on vacation, buy a new car, whatever it is, right? It depends on how much profits that you're really pulling out, but you get the idea. You want to celebrate your wins. So this is the chart of TAPs, target allocation percentages. I would say most of my clients are A, B, C, and a few D, right? If you're a sole proprietor and you're like a one woman shop, you're probably in that 0 to 250. Maybe you're killing it at that point. You're getting all the way up to $500,000. But you'll notice that straight across the board, the tax percentage is always 15. So for those smaller companies, right, you're going to probably be paying yourself 50%, 35%. And this is not literal salary, right? This is, it's called owner's pay. I like to refer to it as owner benefit, because you really, you can have things that aren't salary. If you're an LLC, it's not salary. This is an area where you want to talk to your CPA or your tax person and figure out how to best do that for your own situation. But, if you're a real small business, or you're just getting started, see if you can do 5% profit, right? Take it right off the top. So now that we're in compliance and we're profitable, you probably want to grow your business, right? And you don't think necessarily that what's in my books is going to do anything to help me grow my business. Well, you might be surprised. So there's a lot of information that ends up going into QuickBooks, right? It's a giant database, basically. It's not just, a couple of numbers. It's a P&L. My accountant needed it. I need it for my taxes. There is a treasure trove of data in your accounting system. So first off, it is not a once a year activity to do your books. If you're like, I got to do my taxes, it's March, I guess I'll do my books now, or I guess I'll go see my accountant, you're missing out. You're missing out on a huge amount of opportunities, right? I would say at a minimum, update quarterly, right? Better would be monthly, or hell, if you really want to stay on top of things, weekly. I actually work on my business every Friday. I try not to deal with clients if I can help it. I try to do all my profit first stuff. I try to do like marketing things. I try to do a lot of that stuff weekly, right? You want to make it a habit, because then when you're looking at it more frequently, it's easier. It's less to do. It's easier to get it done. And QuickBooks has actually some fantastic reports that are built right in. So the most basic one, and this is what you're going to need for your taxes, and your CPA is going to want to see it, and your accountant's going to want to see it, profit and loss. It's going to show you how much profit you're making over a time period. Usually it's that year, it could be a month, a quarter. You can change the settings, but the profit and loss is really kind of your starting points, like how are we doing? The thing that's tricky is you can't confuse it with cash flow. They're going to be related in a small business, but they are not exactly the same. So that's a little bit tricky, right? But the more interesting things that are really going to help you with growing your business, accounts receivable aging. If you're having clients pay you after the fact, if you're sending them invoices and you're waiting for them to pay you, if you pull up an accounts receivable aging report, you're going to find your problem children. You're going to find out like who didn't pay you from 3 months ago. Like maybe you forgot. I don't know about you guys. I forget things a day later. Like you can tell me something now, I'll forget in an hour. I don't have the greatest memory, but it's all in my QuickBooks. So I know if somebody didn't pay me, I can pull up that report and I can see exactly who those problem children are. And I can avoid cash flow problems by addressing those issues. And the sooner, the better, right? So you don't really want to let people go maybe you have terms, maybe it's a due upon receipt, maybe it's a 30-day, 60-day, whatever it is, you want to keep an eye on it. You can actually also set up QuickBooks to have late fees automatically calculated on your invoices, which is kind of a cool idea. You don't have to manually do that. But that's probably one of the most popular, after the profit and loss, one of the most popular reports on how to grow your business. Because if you run into cash flow, you're going to be scrambling, right? You're going to have trouble making payroll. It's bad. It's bad. You don't want to run out of cash flow. And if you're going to have a cash flow problem, you want to see it coming. You don't want it to be, oh, I went to my bank and there's not enough money there. You want to be able to forecast these things. And when you know how much money is coming, it lets you plan, right? It lets you plan for marketing. It lets you plan for growth. Now, another really useful report, income by customer summary. Might be a little bit like, oh, why would I want to know that? Well, the cool thing with this is that you can look at a year and you can see what customers paid you the most amount of money over the year. And if you notice, like the top customers, maybe there's some similarities between those customers, you might want to take that information and start to build what they call an ideal customer model. And maybe you can say, oh, this one company or these two companies of a certain type send a lot of referrals, or we do a lot of work with them. How do we find others? So for me, what I found is that bookkeepers who have their own bookkeeping business and don't do tax are a fantastic contact for me. And I try to make those connections, right? They become like an ideal customer. There's a lot of the bookkeeping work I don't have to do. I just do their taxes. It's much easier on our firm during tax season, and we make a good amount of money. So those are great relationships, right? That's one of my ideal customers. So it's really, a great tool to just see, like, where does the money come from? And then go chase that, right? Don't chase the pains in the butt. Don't chase the clients you don't like working with and don't pay you. Those are the worst. Go after the ones that pay you a lot and hopefully you like working with. So that's pretty much it in a nutshell of, how are we going to set up our business and not get in trouble with the IRS? How are we going to be profitable? And then how do you use that accounting information to try to grow your business? And one thing I didn't mention on the accounting information to grow your business is you can make it even more complex than that. You have to usually get outside of QuickBooks, but you can start with like return on investment and marketing, things like that. So, but that's 201. That's not the 101.
This has been awesome. And we had plenty of questions, which I'm not surprised about. So we will try to get as many as we can. But initially, there were a couple in this realm. So I work with a third-party HVAC contractor. When a client wants to do an upgraded HVAC inspection, the extra cost goes on my invoice and I reimburse the contractor. Do I need a 1099 to the HVAC company?
Probably. I mean, unless they're a corporation, probably yes.
Okay, so if the HVAC company isn't a corporation, if it's a sole proprietor, LLC,
Yeah.
okay.
Yeah. Anyone you're paying, it doesn't matter who it is, as long as they're not a corporation. If you pay them more than $600.
Okay, Vern, I think that will answer your question too about the labs. Okay, so if you pay anyone over $600, they need a 1099, which is kind of, there was a question somebody asked, oh, I pay HomeGauge over $600. Do I need to send them a 1099? And since we're a corporation, the answer there is no.
Nope.
Let's see. If I have an LLC and work for myself with no employees, use QuickBooks and take my taxes to a tax professional, is there a reason for me to find and have an accountant as well?
I think it comes down to, what do you want to do yourself and what do you want to hand off to other people, right? Because anything you do that's not in, in woo-woo terms, they call your zone of genius, right? It takes away from you doing what you do. So if you want to do your own accounting and bookkeeping and things like that, by all means, go ahead. I used to do my own marketing. I thought I was so clever. No, I am not. I am not clever. I'm not that creative. Once I said, you know what, let the marketing people do the marketing. I exploded. Like I was holding myself back thinking that I could do it also, because it wasn't my zone of genius. I am not a brilliant marketer. I don't know anything about SEO. I don't know that much about social media. So it's really a matter of, you know, where do you want to put your own personal time and effort? I couldn't imagine trying to do accounting and not being an accountant. I mean, sometimes when I have to do my own books, I'm like, oh my God, really? Do I have to do this? I can do this for other people all day long. I don't want to do it for myself, but you don't have to. I mean, you could even file your own taxes, but you know, it's a personal choice.
The time you want to extend to it. Okay, a couple more. I want to set up an LLC. My wife and I filed jointly, but we have a very complex tax situation. Is it possible to voluntarily file business taxes on a separate return? Or is my only option to married filing separately and file a Schedule C?
What you could do is you could make an S election to be taxed as an S corporation, and then it would file its own return. That might not do what you're trying to accomplish. That's a really complex question. I would say that you want some tax planning. If your CPA doesn't do it already, have them do tax planning for you, because a lot of times marry file joint is better tax wise, like dollar wise, than marry file separate. There are reasons that you would want to do separate, but that it's probably more than I could answer right now. But the only thing you could do if you really just like didn't want the wife to have the business on her return is that marry file separate, or make that a selection and file its own return.
Okay, it's kind of a complex. Okay.
Yeah, it's very complex.
Okay, I am using QuickBooks Self-Employed. So far, I have not made enough to pay myself, and QuickBooks says I don't owe any taxes. Do I need to file anything?
It depends on the type of entity you are. So if I'm assuming you're an LLC or you're sole proprietor, if you're making anything, if you've got any profits, if you need to make quarterly estimated payments, if you're not at a loss. If you're running at a loss, you don't owe anything. But if you're running it all in the green, you're going to owe income tax and you're going to owe self-employment taxes. So I don't know, I don't love that self-employment version of QuickBooks. It's really limited. I think they bought it from some other company and just kind of like glued it into the QuickBooks world. I'm not a huge fan. It's hard. I find it a little hard to use also, but if you're positive with your profit and loss, you're going to probably owe something.
Okay, and I think we have time for one last question. So I think in a couple of your slides, you suggested an extra bank account. So we have a question. Extra bank accounts cost money. Could you just set up reserves in QuickBooks?
Okay, so it will physically accomplish the same thing, right? This is a mental thing, right? It's not literally where is the bank, and there are very cheap alternatives, especially if you're okay with using some of the more modern fintech companies, or if you go kind of talk to some local credit unions, some kind of different banks. We actually, with Profit First, we kind of keep track of what the banks are that will give you a really good deal or not charge you a fortune for having bank accounts. But the whole point of it is that you don't log into your operating bank that you use day in, day out and see like, oh, look, I have all this money in my tax account. I'm going to go spend it, right? You want to have it out of sight, out of mind. So it's a mental game that you're playing with yourself more than, the importance of it being just allocated somewhere. And if you're doing it just in QuickBooks, it probably won't have that mental effect of getting it out of sight and out of mind.
Awesome. This has been so helpful. I know there's been a few unanswered questions. I'm sorry. This has just been, I'm not surprised, so popular, but we really, really appreciate you. This was all so useful and so helpful. So
Awesome.
thank you. Thank you for your time.
Fantastic. Thank you for having me.